Hello, everybody. Welcome to another episode of the Everyday Trader. This is Eric Hale, CEO and founder of Trader Oasis, with my partner and friend, Greg Jensen.
Good to be with you, my friend. On the eve of you getting ready to go to the Berkshire meeting. Well, maybe not the eve, but a couple days before.
Yeah, the Lollapalooza of capitalism, where the Woodstock of capitalism. Get to go see the Oracle of Omaha, Warren Buffett, Uncle Warren, I call him, 94 years old. You know my story. I don't know if I was visiting my parents who lived in Vegas for a while, and we were driving by somewhere on the strip, and it said James Brown tonight. So I checked to see if I could get tickets, and the tickets were available. So I told my parents, "I'm like, James Brown is in town. Let's go see him." And my mom's like, "Yeah, they're like, I'm like, Mom, you love James Brown." She's like, "Yeah, but it's a Tuesday or whatever it was, and it's late, and we wouldn't get home. We like to go to bed at 10. They're like, "Yeah, but you should go. You should go by yourself." And I'm like, No. I want to hang out with you guys. And of course, we had a boring night, and I'm sitting there going, "Man, I don't care if I went by myself. See James Brown." So a few months later, James Brown died, and I was like, "Wow, I had the opportunity to see a living legend, and I missed it." And so that resonated with me. This will be my fourth Berkshire Hathaway meeting. And I've been able to see Warren and Charlie last year. Of course, Charlie wasn't there, but it is quite an event to go and listen and hear people speak, to hear the words. I mean, it's not the same as watching it streaming. I know you can see the whole meeting streaming. There's the ambiance and all the stuff that goes on outside. They have a big convention center, and all of the Berkshire Hathaway, well, I shouldn't say all of them, but the companies that Berkshire Hathaway owns, for example, Dairy Queen, they own Dairy Queen. Dairy Queen's there selling $1 dilly bars, and I'll do my best to only have one of those, but it's hard. Like, I'll just have another one. I think last time I had two. They're pretty good. But Brooks, did you know they own Brooks? He owns a company that makes boats. So they have like one year they had a Jimmy Buffett decked out. They had a Buffett and a Buffett decked out boat there. Clayton Homes is neat. Clayton Homes has model homes. They Burlington Northern.
They own a big furniture retailer that's out.
Oh, so that's outside.
Willie.
Yeah, Nebraska. Oh, they do where you are.
Yeah.
Okay, Nebraska Furniture Mart is the place, and it's huge. They have all kinds of good deals, and they have special deals if you're a Berkshire Hathaway shareholder. And then Borsheim's is their jewelry store, and they have really good deals. And anyways, Fruit of the Loom is also there. So if you want to buy yourself some underwear, and that's always the biggest one. That's the biggest line, is people waiting to get in line to go get, to get like $4 pairs of underwear or something.
Yeah, that is awesome. So a couple things that I'm going to put on your task list to get answers to then.
Oh, okay.
You've already insinuated that he's going to talk about one of them, right? He's been very quiet about tariffs and his opinion on the tariff issue that's been going on, but he's going to talk about it at the shareholder meeting. So yeah. Tariffs, number one, what's his stance on them? What's his opinion? But the other one is he putting capital to work yet? I know he went to a big percentage of cash. Not just recently, it's actually been over the last 6 months or so. And a lot of it was Apple, is that he was unloading. He was selling a lot of Apple and reducing his size in it significantly. Really interesting to see if he opens up a little bit about things he's looking at. Is he comfortable putting a lot of money to work right now, or is he still questionable? So those are the questions that you have to somehow get put in there. Okay.
Well, for people who get there early, you can ask questions. I'm not, I don't plan to do that. There's always you get some young kid who says, "Where should I invest my money?" And the answer is always the same. This is the one question that kids always ask, "What should I invest?" They praise him, how wonderful, blah, blah, blah. And the answer is always the same. Invest in yourself. And in fact, the 5K on Sunday, that's the name of the 5K, is invest in yourself. And Buffett actually said, he made a pretty good analogy, is, if I could buy for, maybe $50,000, give you 50 grand to take 10% of your earnings for the rest of your life, that would be an incredibly good investment for me, just to take some portion of your earnings, whatever it is. So the answer is you should invest that in yourself. I mean, it's really motivational to hear him say that. But the same question gets asked. And then there's always rabble rousers that'll ask him hard questions. And I'm not interested in waiting in line to ask a question. So I go there to get the experience and just to be able to see a living legend live. I actually have one extra ticket if you want to come, Greg.
I wish I could.
Yeah. All right. Maybe next year when he's 95. I think, I don't know. I think he's got another 5 or 6 years, so you can probably wait. I'm not sure how he does.
Make you feel like James Brown, aren't you?
Yeah, well, I had the chance. I could have. All right. Speaking of Warren Buffett, one of the best stock pickers in the world, legendary investor, really very, very generous in his sharing his thoughts and analysis on how he approaches stocks. Great. You can do a lot worse than trying to study him, and he's very open about sharing his approach. But you and I were talking and offline, and we had an idea as a theme for today's Everyday Trader, and that is to ask if you had to buy this question came up to me actually, and I've been pondering it quite a bit. Is if you had to buy one stock for the next 10 years, what would it be? And I've thrown it out to some people, different people, to get different answers. And you and I were talking about it. And so we're going to put a little twist on it. And so we decided 3, like each of us, if I'm looking to build a portfolio long term and looking out over the next 10 years, what 3 equities would I want to have in my portfolio? Now, I've done these sort of stock picking contests before. In fact, at OptionsANIMal, we do an annual end of the year thing where we pick a few equities, and I actually do pick 3 equities. It's always fun to see how it performs, and we're all over the map. And these stock picking contests, I mean, I've heard of high schools doing those, and there's this sort of, if you just, since the risk is very low, you just put all your money on some crazy stock, some pharmaceutical company, and it's $3 and it ends up going to 2,000. That's not the approach that we're looking for here. We're just, and it's not so much, I don't think, for people listening to this about the names that we're gonna throw out, but really, what is our thought process behind them? I think that's probably the best sort of discussion. And maybe I'm not saying that you should agree with the way that we think, but maybe it'll help you think about how you should be thinking about the stocks that are in your portfolio. I was going to show some historical performance just to put things into perspective. But before I go there, did you want to add anything, Greg? Or
yeah, in fact, I'll share a couple of again anecdotes of my own that go along with that idea. I got first turned on to the stock market in high school, like you said, in one of those stock picking things. And at the time, I'm a junior in high school, I believe, is my economics class that I was taking that we did it in. And, this was 1989, and I had been following this young kid in the NCAA that I thought was an amazing basketball player. And his name was Michael Jordan. And he had just signed a contract with Nike, and I thought, I'm going to buy Nike as my stock. And obviously everyone knows what Michael Jordan did for Nike. They turned them from a no-name sneaker company to one of the biggest brands in the world. And he was the main reason why I did it. And so I actually won that year. I actually placed nationally with all the other people who picked Nike in that competition. But it excited me about what the stock market could do. And, another anecdote that I wanted to share, and I know you're going to show some examples of 10-year performances, is something that I had actually bought for decoration in my office. In fact, you can see one of them if you look over my left shoulder. This is my left shoulder. It's probably right to you when you're watching this. I don't know. Maybe I don't know if it's inverted or not, but my left shoulder right there, I'm pointing at it. This is actually an actual share. It's one share of Disney. I bought that share as a decoration for my office in 2006. At the time, my kids were young. They loved to go to Disneyland. We went to Disneyland often, and so I thought I'd buy them something fun to be on the. They didn't think it was nearly as cool as actually just going to Disneyland and paying a lot more for.
We thought it was cooler.
Yeah, I actually thought it was way cooler. But at the same time, I bought myself a share. It was this one. You can see that logo right there. That is Apple. And this is one share of Apple from 2006. At the time, they were both around $100 that I paid for them in 2006. Disney, today, that same share of Disney that's hanging on the wall right up there is worth $89.96. It's actually gone down in value in the last 20 years. It's worth less than what I paid for it. The share of Apple has had a 7-for-1 split and a 4-for-1 split since that time. And so it is now, instead of one share, it's now 28 shares that's worth $5,890. It's a little bit more of expensive of a wall hanger than my Disney share over there. But the reason that's important is sometimes your best investing, why we want to bring this up, is sometimes your best investment, part of your research that you're doing is finding the stories. Obviously, as you know, you look back to 2006, that was like a perfect time to buy Apple and just ride it. They had a story at the time of iPods and iPhones and Macs and music services and everything we know and love and have become Apple fanboys over the years. And it's been a fantastic investment to just buy and make money with Apple. On the other hand, Disney has not. Not that they don't make money, not that they don't still have a lot of new innovations that they make. We've got Disney Plus that wasn't in existence back there. There's a lot of new products that they've rolled out. But the difference in business model and the path for profitability is why Apple was so much better of an investment at the time than Disney was. And so what I'm always trying to do as part of my research is trying to look into the future and saying, okay, what's next? What's the next innovation that's going to be Apple, or it's going to be, well, you've got a bunch of slides you put together that actually kind of show, and you can see some of the performance of different industries over time. So I'll quit belaboring this point, but I just wanted to share that anecdote before we kind of jump into the actual ones we're looking at right now.
That's a really cool story, and I've seen both those shares before, and I think that's neat. It did blow my mind when you told me earlier about the Disney one being basically flat over that period of time and the tremendous growth that we've seen in Apple. So I wanted to share, and I'll be honest, I used ChatGPT to help me out, looking back over the past, looking at different decades to see which were the best. Now this is 2025, so we ended up looking at even decades just to give a perspective and help sort of frame this out. So from 1990 to 2000, the S&P 500 total return in that 10-year was 512%. And this is a total return, not just the stock price, it includes dividends. And the best performing sectors in those periods, if you had gone to January 1 and held through December 31st, Dell Computer, you had a 92,000% gain. EMC almost 70,000, Cisco 69,000, Microsoft almost 10,000% gain, and AOL, which doesn't even exist anymore. I guess, does it exist anymore?
No, they don't.
Yeah, I guess they're part of Yahoo.
They're part of Time Warner now, right?
You've got mail. So that was the growth then, and that was right in the tech bubble. Things were really weird. The next decade, not so good, was the lost decade. We basically had the S&P 500 was flat. It actually was down, but including dividends over the year, you did get to flat. And we had some really weird sort of, that first decade there made sense. But when I look at here, I got Green Mountain Coffee Roasters, and that brings back, some memories, because I remember trading that period of time, and we were GMCR, right? We were looking down 8,000% almost. Hanson 6,500. That was one of your favorites, which became Monster Beverage.
Yeah, it's still on my watch list today. I still trade that one from time to time.
So Bally's the casino, and then Southwest Energy is the utility from Texas, and then Clean Harbors, those growths. I find it hard to imagine, looking at that previous decade. I think I can pick some of those. I was a little bit surprised, of course, by looking at this, and I'm like, I don't know that I'd be picking any of these here. Your thoughts on this decade? Anything?
Yeah, no, this was obviously included the great financial crisis. And so a lot of the stocks that had really big performances leading up to 2008 gave it all back in a couple of years. And I think what's important to note here is that you can still make money when the market's flat if you're really good at picking stocks and being able to adjust your time frames of when you're investing in different things. And we teach a concept at OptionsANIMal where we say, don't fall in love with your stock. Be willing to sell something. A good example of that, I would say, is General Electric. At one point, GE was the largest market cap company in the S&P 500. It was the dominant player. IBM was close behind it. Now, those two companies are both still in existence today, but just I'd throw Intel in that same crew. I know you've got a trade on Intel right now, but there's a part of your fundamental research where you have to be willing to say, this company's business model has run its course, and I don't see growth upside for them anymore. Doesn't mean they're going to go away and not, file Chapter 11 and go the way of Bed Bath & Beyond. It's just, you got to be willing to change if you want to continue to perform.
Well, let's look at the next decade. Now, this is even weirder, right? So overall, the S&P 500 up 252%. Domino's Pizza, number one, nearly 4,000% return. Netflix, 39. Lending Tree, Market Access, and Neurocrine Biosciences, which is a company I've never heard of before. Market Access, I have heard of, but I was really surprised to see this. Again, the theme here, folks, is we haven't seen one company repeated here. Right?
And in that time period that I showed you, my $100 stock that went to $5,500 in value, almost $6,000 in value, Apple wasn't on that list.
Yeah.
So you can still make really good returns, but it's just interesting to look at potential performance. I think of all those five right there, Netflix is the only one I ever traded. I don't think I've ever traded Domino's. Have you?
No, but I wish I did. I actually sat through some training in, it was like 2015, 2016. And this company, they wrote the book called The Oz Principle. Some of you listeners might have heard about it, but it's really about ownership. The whole theme is, if you think of the parable from the movie, the story of the Wizard of Oz, so every single one of those people had what they needed in them already. Nobody needed anything from the wizard. And so that's the message from the parable. And we had this company that came in and trained us, and they mentioned when they got on board with Domino's, and they actually did Domino's and they did Marriott, and talked about the importance of taking ownership of things. And you don't have to own 100% of it. If you own 10%, then you own it. So you should take responsibility for, customer, it's one of the things that drives me nuts is, customers not happy. So it's not my fault. Like, I'm not saying it's your fault, but you could help to solve the problem. So nobody's blaming you. It's not about blame. So, but take ownership to solve the problems. And Domino's Pizza, if you looked at their stock price when they got hired, when they hired this company, was an inflection point in their stock price. And I brought it up when I was in the training because they kept using Domino's as an example. It had a huge turnaround in the company. And I said, well, do you realize what it's done to the stock price? This is when you guys came on board. Here's when the stock price went up. I said, who are you working with next so I could buy their stock? And I do think there's a lot to that. Actually, one of our listeners just retired as a Domino's franchise owner. And I talked to him about this, and I really do think one of the key factors for determining who's a good company, and this is what Phil Fisher, if you talk, Warren Buffett got his inspiration from three people. So Charlie Munger, Phil Fisher, and Benjamin Graham. Everybody knows about Benjamin Graham. Benjamin Graham was purely a numbers guy. What Phil Fisher, and this is Ken Fisher's father, what Phil Fisher brought to the picture was actually diving in and looking into the company and looking at the people, the quality of the people that are in the company. Do they have a good sales team? Do they have management that's honest? And are they just, trying to, gig the numbers to make the next quarter look good? And, that sort of, that is a very hard thing to judge is management, do they have integrity? And then there's the Buffett calls it the something imperative. I forget what it is. That term will come with me. It's this term where, people are falling in line with, whatever the latest story is. And we've got it going on right now in real time is everybody, not everybody, but a lot of companies that are
institutional imperative.
The institutional imperative is what it is. And do they fall? And there's a whole bunch of things around it. You end up getting surrounded with a bunch of yes men who won't tell the CEO that, hey, this is messed up or you're messed up. You're not looking at the right things. I think Tim Cook's actually is a good example because Tim wants to know the truth. We can criticize Apple, but he's one that, it's clear that, he shares news and information with shareholders, and sometimes the stock got crushed. I mean, I can remember years like, wow, I wish you didn't say that. But, and you didn't really need to say that. You could have couched it a different way and the stock wouldn't have gone down. But in the long run, Apple's done well because of, Tim Cook's honesty with shareholders and employees, which is a big deal with integrity that I think that's out there. And what's happening right now, I think with the tariff thing, I think, the words of Rahm Emanuel, who's not the only person who said this, but he gets credit for it, under Obama, Obama's chief of staff had said, never let a crisis go to waste. And I think there are companies right now that are using the tariff crisis as their excuse to sweep some garbage under the carpet here. So I'm cautious listening to some of the shareholder comments that are happening right now. And a friend of mine was going to order some products from China, and the prices were higher. This was like a month ago. And they said, well, why are the prices higher? So it's tariffs. They haven't been implemented yet. Why'd you raise the price? I'm like, so, it's there. I'm not downplaying the chaos that is happening right now. I think it's
wondering how you.
Edgar Denny has named it the Triple T. This is the Trump tariff tantrum, maybe. Yeah, Triple T. Yeah. So anyways, it's definitely causing a bunch of things that are happening right now. So this is through 2000, and then I've got up a year to date, through today. Who are the top performing stocks since January 1st for the last 5 years? So MicroStrategy, number one, Bitcoin.
Yep.
NVIDIA, not a surprise. GameStop, this meme stock short squeeze play, Supermicro, which is just getting trashed as of lately, and then Summit Therapeutics. So I don't know if there's anything to be taken away from these stocks here. And again, the key theme was none of these are repeated. So what got you? I think the key takeaway from that is what got you there isn't going to get you to the next level. What you got you here isn't going to get you there necessarily, is the words I'm looking for.
Right. And I think that's important to look at I love this graph. I know we had talked about this before. We started is that oftentimes an asset class might perform really well 1 or 2 years in a row, and then it finds itself towards the bottom of the performance, maybe the next year or two. And, the last 2 years in a row, the number one performing asset class of the major asset classes has been gold. And it is at all-time highs. I actually went into a gold dealer recently. I went into a coin dealer just to see what kind of demand they were looking at. And he said, "Oh, we've got a lot of people buying." I said, "So we've got a lot of activity." And I said to him, "Was it buying or selling?" He's like, "Oh, we're not buying anything right now." He said, "Oh, why?" He said, "It's not worth it." He's like, we're going to see it pull back. And I know this is an anecdote. This is one guy saying that he feels like gold is overrated, but I thought it was interesting that gold dealers right now, coin dealers, they'll sell you gold all day long, but they're actually not buying gold.
You can buy gold from Costco now.
Yes, I saw some people selling it. I saw a video of that,
and somebody said it got delivered to the house and it was just put like a FedEx package on their front doorstep. Like somebody didn't realize how much money this thing was. Maybe it's insured, I guess. I don't know.
Maybe, but sorry, I kind of distracted by
the point is, this jumps into what got you there. Just look at last year. So the last 2 years, the S&P 500 was the best performing asset class. This is emerging markets, global high yield, gold, REITs. This is the Europe, Africa. This one is the emerging markets.
Emerging markets.
Yeah, and there's global investment
grade. Yep.
Cash, U.S. Treasuries, commodities. So these aren't by stock, but you'll notice that something's on the bottom, then it goes near the top, and it's just trying to stick with this. What this reminds me of is when I was first trying to pick ETFs. When I first had a 401k, my very first job is I would pick the ETF that performed the best last year, and then the next year it would always do terrible. And I realized that this is why you tend to get these outperformance. And S&P 500 doing great, and this so far year to date. By the way, this is from Bank of America. This is a quilt infographic, it's called, and I can spend hours sort of just going through this and thinking about what happened during the different periods of time. And the thing is, we're going to have big shifts going forward, and nobody knows for sure what's going to happen. You and I don't, but let's take a look at some ideas on what do you got for us, Greg? What do you?
Well, I'll be honest, I had a hard time narrowing it down. And before I go into this, a lot of it has to do with, kind of a dual issue of, if I'm looking for over the next 10 years, do I look for small companies that have the potential to have these big outsized growths? Or do I look at buying the big mega cap name that may actually gobble up some of those small companies if they see them actually really performing? I think that's one unique thing, especially now in today's market, that wasn't really as prevalent even 5 years ago. I mean, there are 7 companies out there with market caps so large and so much cash on their books that you could easily say, the 3 stocks you should own for the next 10 years are, NVIDIA, Google, and Microsoft, because they're 3 of the biggest companies in the world. Or flip-flop and say you should own Apple and Amazon and Tesla or Broadcom. But so I think there's a balance there, and you have to you have to look at it. But one of the things I wanted to try to do with this exercise that you and I are doing was try to say, okay, what trends do I see that seem to be changing in society, in the economy, and what are some companies that could potentially take advantage of that? I think the first one is the one that I think everyone knows. It's been what's driven the boom the last couple of years, and that's AI. I think one of the best ways to play AI is still in the semiconductor space. I don't think there's a proven winner in the software space yet. I still think those can come from AI. But I think the one of the best ways to do it is to still play the semiconductor and the build out. I would say NVIDIA here because they are the leader, but I also think they're overpriced. at these valuations. So I actually like, if I had to pick a semiconductor company to own for the next year, I'm going to have to say Taiwan.
This is for the next decade.
Or for the next decade, excuse me.
Yeah.
I'm going to have to say Taiwan Semiconductor is the one I want to own.
Stock symbols TSM.
TSM, Taiwan Semi. This is the world's largest pure play semiconductor. I mean, they own about 60% of the market share. They produce upwards of 90% of the advanced chips that are critical for AI.
Super fan Barry is right now is either laughing or he's shaking his head, Greg, now.
Yeah, I know.
We'll have to get Barry back on to see what he says here.
But again, who's the client list of Taiwan Semiconductor? It's Apple, it's NVIDIA, it's AMD. I mean, Taiwan Semi is at the heart of all of the manufacturing of these chips. And I think their growth is going to continue to be solid. This is a company that's big enough that you don't have to worry about NVIDIA gobbling them up. I mean, they're already almost $1 trillion market cap themselves. They're $862 billion. It's a big, solid company. They've definitely pulled back from their all-time high that they were at earlier at the beginning of this year. So this would probably be one I'd be comfortable owning. Again, very well company. They do have some potential risk. If I'm looking at risk factors of things like tariffs, because obviously the name Taiwan Semi, they are based in Taiwan. They do have global manufacturing all over the place, but their main manufacturing headquarters are in Taiwan. So there is some geopolitical risk with this one. But as far as their revenue growth goes, the 35% year-over-year revenue growth, they have 58% margins, just a fortress of the balance sheet as far as assets that they've got. So I think this is definitely a stock I wouldn't mind owning for the next decade in my portfolio.
Yeah, I was reading that BCA research over the weekend, published a piece that the probability of a hot war between the United States and China, we're actually technically at war right now. It's sort of a Cold War.
Yes.
Cyber war. But if hot war, this is where bullets fly and blood gets spilled. The probability doubled recently, and it's now at a 20% according to their numbers. Went from a 10% probability, 20%.
Wow. Where was that at? That's
BCA research.
Okay.
Yeah, this is the sort of thing I'd love to. We should be talking to our friend Jonathan Ward or Leland Miller about.
Yeah. Let's get Leland on here.
Yeah, Leland's in the White House. He's providing, he was an advisor during the transition, and he's advised both White Houses, by the way. So, or not, I shouldn't say both. He's everything since Obama. So so Leland, hopefully we get Leland on here to talk about that or to get his perspective. I'd really love to pick his brain about tariffs. So it'd be interesting to hear there. So Taiwan Semi, for me, so let's, my number one stock, I'd say, it's more than just talk, but actually one of my favorite authors is Nassim Nicholas Taleb, and his book Skin in the Game, which is, do you have skin in the game? So my number one holding in my most active portfolio is, ladies and gentlemen, Tango Sierra Lima Alpha. That is a Tesla company. It is my largest holding that I have in that active account. Now, my overall largest holding is Apple, which I'm not as comfortable with. And you and I, we'll spill the beans ahead of time. Apple is not on our list,
no,
which is kind of interesting. What's not on our list? And Buffett selling Apple is a good thing. It's probably an indicator of something. But when I look at, the most innovative companies from a technology standpoint, I do think, full self-driving, I think if you try to imagine the future, we've all watched sci-fi movies and, what was think of Minority Report, where nobody's driving a car. You're just getting in a vehicle and that vehicle's driving someplace. We are, at some point, we're going to be in self-driving cars and you're just going to take it for granted. people are not going to own cars. You're not going to need to own a car where you can get a car on demand wherever you want. Now, maybe where you live up in.
What was the movie with Sylvester Stallone and Wesley Snipes, where they go into the future and have the self-driving cars, that he finds an old like 76 or like supercharge. I don't remember what I got. I'm gonna find it. Sorry, go back to you.
I don't know. So I do think full self-driving cars is incredible. The other thing is, I don't know if anybody's aware, Europe has had a massive blackout. The exact causes of it, at least it looks like some contributor to that is the fact that they're so heavily reliable on renewables.
Demolition Man.
Demolition Man. That was a
Demolition Man. There you go.
Oh, that's a good one. Gonna have to put that on a list and watch it on a plane or something. Yeah. So huge blackout in Europe, and driven in part due to the heavy reliance on renewables and moving away from more traditional fossil fuels or other baseload generation. The answer is, there's a couple different answers, and we could, of course, step back and, more coal, more nuclear, more gas. And I'm not saying I disagree with that, but storage actually is tremendous. And Tesla has a competitive advantage in already having a large experience. And Australia has one of the largest baseload installed. I actually did some work on a power plant in Toowoomba. I never actually went there, but I did some work remotely. Worked for an engineering company that built this huge power plant, and they've got some unique situations out there, and they've got this massive battery storage out there, which has really helped their reliability. And being able to have a battery allows you to load shift, so you can save your electricity, and then when at nighttime when people need to run it or other periods of time. So that's another huge sector that I don't think is fully appreciated by shareholders or analysts. And then this whole autonomous robots thing, I still struggle with the need for a robot. I don't know that I need or trust one. I'm trying to ask what I would mop the floors, and you can already get one of those, right? You can get a Roomba that can clean the floors. Fold the laundry, that might be good. Mow the lawn, yeah, maybe. I don't know. How much is it going to cost me? I don't know. But my dad, he's 80 something years old, and does he need help with somebody to make sure the stove isn't still on, and maybe help getting out of a chair, or lifting some tasks and doing some things around? I think there's some fit. I think there's some applications that are pretty interesting, and I don't think we're fully appreciating that. So for me, I think long term, over the next 10 years, I think Tesla is probably be seen as a buying opportunity here.
Okay. Well, I'm gonna keep going on that theme, because you actually led perfectly into one of my next stocks. There was a report by a couple of Morgan Stanley analysts yesterday talking about robots, and they're projected. They actually project that by the early adoption is going to start in as early as 5 years, in the early 2030s. We're going to start to. Is that crazy that in 5 years it's the 2030s? We're getting old there. But anyway, they see by 2050, Morgan Stanley is projecting that there will be a billion robots in use worldwide, and that we are going to see revenues in the $5 trillion number in the robotic space. And so trying to pick who is going to be a player in that could actually be a very rewarding stock play. Now, they did come out and say, Morgan Stanley came out and said that Tesla is probably the leader in that space of all of the companies. And they named NVIDIA and Google and Microsoft and Amazon, all the big guys, right? Because they have so much money and can gobble things up. But one other play that they threw out there that I actually did a little bit of research in, that I think could be a winner here, is a company called Harmonic. Their ticker's Hotel Lima India Tango. And they would be a component maker. Their primary business, as they've been in business, has been in video. They've been a leader in broadband and video. They've had ties to Obviously, things like Google production, video production, they do have a very strong revenue growth going right now with this surge of ties to robotic platforms and some of the AI-driven services that are offering. So this is an interesting player. It won't be the only player, but one that I thought, here's a stock that, as I did some research, that has definitely had quite a pullback in the last year, and it's never been a blow up to the upside. And it's a pretty small company that if they can find themselves in a position as this robotic explosion happens, could see a lot of revenue going their way. If you looked, let me just throw an example out there for probably the first, I'm going to say 15 years that I was in the market. So from like the mid 90s to about 2010, maybe even a little bit after that, maybe even argue the first 18 years, there was a certain semiconductor company that was just kind of they're there. Everybody knew that NVIDIA existed, but they just made video gaming chips.
Right.
And their focus was just about, they make these high res things that you put for Xboxes. And is there a demand for that? Yeah. And NVIDIA was around for a long, long, long time. And it was a relatively volatile name, but it just kind of went up and down, didn't go anywhere until all of a sudden they started making some advances in artificial intelligence and they saw the oncoming boom of AI. And Jensen Huang positioned the company in a way that allowed them to absolutely explode. Now, is Harmonic going to have the same type of positioning? Probably not, but it's one of the players. And there's a handful in the name. I picked one of them. You could look at things like Rockwell Automotive might fit in there. There was another one. I know I'm not supposed to be throwing out honorable mentions right now. I won't do it yet, but there was another company that was on that list. TE Connectivity is then, and the ticker is Tango Echo Lima. And again, these are plays that are primarily surrounding their expertise in component makers for robots. And the robotic drive that may happen if, again, Morgan Stanley is correct. And so, I don't know, a couple interesting names there that if we do get this wide adoption, I agree with your stance in some cases, although if I had a robot to mow my lawn, because my teenager is going to be out of high school in a couple years, and I don't like mowing lawns. It's not my favorite thing to do. So if I can have a robot that can mow my lawn, I know I can employ the neighborhood teenagers, right? And pay some kid, but then I got to teach him how to do it correctly. I can just program my robot to do it the right way.
All right. So let me shift gears here. And this one won't be a surprise, especially if you were listening to the earlier part of this broadcast. By the way, we're streaming now also on Spotify. So we're not streaming live, but there is a podcast. Somebody told me they really want a podcast so they can download it and not have to do YouTube live. So you can find us now going forward anyways. We'll look for the Everyday Trader on Spotify. But when I think, I live in Chicago and I'm a reluctant Bears fan. And, whenever we play the Packers, there's always this graphic that shows how many quarterbacks we've had versus, especially during this period of time when, we had Brett Favre and then Aaron Rodgers. And so for that, that better than a decade of those two quarterbacks and all the quarterbacks that we've had, starting quarterbacks, and just the miserable performance. And I think of Aaron Rodgers as, when Brett Favre was retiring. By the way, he wanted to come play with the Bears, and the Bears turned him down. McCaskey's too cheap. That's a story altogether. I told you that I met them flying coach on United, right? One time, the McCaskey family. I'm like, that's the McCaskeys, and they're a coach on the United flight from Harrisburg. Like, what the? Like, what? Not even in first class. Like, Not even flying private. Never mind flying private. They're they're all Bears fans. Anyways, but think about it. Like, I mean, think of how many years Aaron Rodgers sat behind Brett Favre, behind the shadow, and I didn't know what to expect, but it was pretty clear that what Aaron Rodgers was able to do just extended what Favre. He was just, I have a tremendous respect for Aaron Rodgers. He's one of my favorite quarterbacks, private players. And here he had, Aaron Rodgers there Aaron Rodgers had Brett Favre to watch and learn from for years, many years before and then he just exceeded. So the parallel here that I'm talking about is, of course, Berkshire Hathaway. And, and there is excellent leadership between Ajit Jain and Greg Abel. And Greg is the one who's going to take over. Ajit runs the business, the insurance business, and Greg Abel is going to take over the regular investment business. And he has been around long enough that the brain transfer of, that the tutelage that he's had under both Warren Buffett and Charlie Munger, I'm confident that Berkshire Hathaway will be able to continue the tremendous performance that they've exhibited. And I was looking for, you can look at this year's, the shareholder letter, just to look at the phenomenal performance since 1964, a 5.5 million% gain that has occurred, and the outperformance of the S&P 500. So 39,000% outperformance of the S&P 500. Although that's the S&P 500. If you put a dollar into the S&P 500. By the way, we should clarify, Greg and I had some rules about what we'd pick here, and we said we couldn't pick ETFs. But we said any stock would be fair game. And so Berkshire Hathaway is an equity that is boring as all get out. But when you sit back and look at what has happened to the S&P 500, and so I'm gonna switch over to the SPY here, and especially through this year, we've had some serious pullback, and this is just looking at this year, what's happened. Sort of snuck up on everybody that Warren Buffett tends to do better when the rest of the market is not doing well because of his incredible focus on valuation of companies. And then through, we mentioned Graham, and we also mentioned Fisher and Charlie. So not only just looking at the fundamentals of the company, but diving deeper into the sort of subjective things, into the quality of management. And the other thing is this is a simple thing, is that he believes the businesses should be so simple that an idiot can run them. And 2 years ago, Warren Buffett told the story. Somebody brought up a question, and I thought Warren was telling one of his jokes, but he wasn't. He said that somebody called us from the home office of one of these companies that we own, and they said the CEO, and so Buffett pretty much, that they pretty much just deal with the CEO, and they don't really they don't get into the company's business unless they need to. But Buffett was saying that, somebody called us and said the CEO has Alzheimer's. He's got dementia or something. He's old and he's losing it. And so he said we got on a plane and we went out and met the guy, and sure, he's older, but the numbers are great. So we left him alone. And it goes to this point that he says an idiot should be able to run the company. And here it was, there was a company that was so good that there was a guy with dementia who had legitimate straight up dementia. And I thought it was a joke. He was telling a joke, but he wasn't. But that's, an anecdote he makes, is he wants to buy simple companies, which is for the longest time why he didn't buy any tech companies. But after diving into it, and Greg's the one that convinced him to buy Apple, which has been, one of the best investments that Berkshire Hathaway has had. Now, Berkshire Hathaway has an incredible amount. They own more treasuries than any other entity in the U.S. treasuries. They have, was it like $350 billion in cash right now? So
yeah, I saw a stat that they currently own like 6% of the U.S. Treasury market.
Yeah. So I'd be very interested to see what sort of things Buffett's thinking about buying next. That will probably be added to my list, but you can just buy Buffett and you're going to buy Berkshire Hathaway and you're going to get whatever that company is. That's my second one.
Okay. My last one is another fun play. And I'm projecting myself into the future here and thinking that I was trying to figure out, as you can tell, I'm trying to figure out how to trade around Elon Musk, but not do through Tesla. So my next and last one is I'm going to actually say Rocket Lab. That is Romeo Kilo Lima Bravo. They are the number 2 most prolific U.S. rocket launcher behind, of course, SpaceX. They are a publicly traded company. They're currently not profitable. They're expected to achieve break even by 2027. But there's a lot of demand. This is obviously, as you can see, a relatively new company as far as being public goes. They went public back in the end of 2020, went down to about $4. And then since 2024, with all of the success of a lot of their rockets that have been launching, they've got a couple. They're more of a smaller rocket compared to SpaceX's larger rockets that are eventually planning for interstellar, actually people traveling on those rockets. I think right now Rocket Lab is focused on smaller things, just delivering payloads to different places. But they do have a very interesting sales pipeline. They've got a lot of government support. Not everyone wants to just have SpaceX around as the only alternative. So there's a lot of investment behind this company of trying to help it be profitable. But they do have very good revenue growth. Again, 55% year-over-year increase in revenue growth. Yeah, an interesting play. This one's probably more one of those, like you mentioned, high flyers that could, if their business model catches on. But I do see this as a future of our society. I think space travel is something that is in the future. And whether it's the next 10 years or not, I don't know. But it is something that I know Elon is very focused on. And driving a lot of his energy and effort into making space travel a reality. And like I said, SpaceX won't be the only player, and they're a far cry from market cap wise. I mean, what is SpaceX valuation wise? They're estimating in the $300 to $400 billion market cap already as a private company, and Rocket Lab's trading currently at about a $10 billion valuation. So give them just a small fraction of the market cap that SpaceX does as this continues to grow. And this is an interesting stock to own over the next decade as this one gains some momentum.
All right. Well, that's a different sort of theme than me. I'm still sticking with big caps. My next one is really, I wanted to do something that ties into the American consumer and, sort of retail aspect of that. And I can't, there's several companies that came to the top of the list too. And I'm guessing a lot of you, I will mention both the companies, but one in particular, I think, gets it right. And for the long term, I think they have the best position, and that is Amazon. So Alpha, Michael's, Zulu, November. Amazon really has one of the best platforms that are out there. It's ubiquitous. Everybody in the world knows it. There's right now a lot of pressure, I think, on the stock due to tariffs because they sell a lot of products from China. But I don't think there's another company that's almost as good. in terms of being able to figure out, what consumers want and being able to deliver to them at a great price. And a big part of Amazon is, of course, web services. If you're watching Netflix, you're using Amazon. Just so many different sources that are out there are actually using Amazon. They are very creative. They're working on other technology. They've got AI plays. They've got other sort of technologies that I think are going to come to fruition. Their foray into healthcare, I think, is very interesting. I'd be interested to see if they're working with any of the MAHA, the Kennedy RFK Juniors people to try and deliver. They've got some really compelling solutions that I think are out there in that space. But this has to be my third one if I'm limited to 3 companies for the next decade. So Tesla, Berkshire Hathaway, and Amazon would be on the top of my list. I'm going to throw out another company that let's switch here, because you and I both talked that there are a couple companies that maybe we didn't want to go to. We didn't want to say 5 because we limit ourselves, or maybe we talk too long or make the episode too long. And there's one company that if I can buy, or one person I can invest in who was publicly traded, I would, and they're not. Do you know who Palmer Luckey is?
I've heard the name.
Okay. Palmer Luckey needs to be on it. This is the next Elon Musk. So he's the guy that invented the Oculus.
Ah, okay.
Yeah. So young guy, a billionaire, really smart. Now, his next company is Anduril Industries. They are not publicly traded, but you need to go look at it. First of all, you're going to be terrified if you watch this video right here. Here's a truck driving out in the middle. The guy's car breaks down and he gets attacked by drones. And he's got this new, the Pulsar L, which is an electromagnetic warfare weapon. Anduril, it has been said that whoever doesn't control drones will be a subservient state to whoever does. And listen, I think something like 75% or 80% of all drones are coming out of China, but 100% of the supply chain is connected to, because you might be making drones someplace else, but the components you're using 100% are coming from China. And the drone space, if you dive into what Anduril Industry is doing as a war-hating libertarian, I don't particularly like it, but that is where the money's going to spend. And, our conversation, you and I talking with David, I don't know if he said this in public or on the stage or if it was to you and me, but I know he's very bullish on the defense sector. And I think U.S. defense spending, you think about what's going to happen. And by the way, Palmer is closely tied to the Trump administration. So these are not publicly traded yet, but if I could publicly trade a guy or put somebody on my radar, I think you all need to put Palmer Luckey on your radar. He's got some there's the drones falling from the sky, based on, and go watch some of these other videos. It's almost terrifying. Some of the stuff that they're working on. They've got drone submarines as well, and other kinds of drones. I think this company is going to do very well. I don't know how we publicly trade it yet because it's a private company, but there's something to keep an eye on and put on your radar. So did you have any honorable mentions you wanted to throw out?
There is an honorable mention I was going to throw out as well. And it's kind of a crossover between my robotics play. I actually mentioned their name already, but it also has to do with, they're more of a medical devices company. It's Boston Scientific.
Oh, what's the symbol?
It's BSX, Bravo Sierra X-ray. Boston Scientific is, we're not the only country in the world right now dealing with a demographic problem. We have an aging demographic population who are going to be spending more and more money on healthcare and medical. They're also the wealthiest demographic that's ever lived on the planet of Earth. And they're going to spend money trying to live longer, and increase their quality of life with increased money spent on healthcare. And there's a lot of names that you can look at here in the healthcare space. Obviously, you can look at drug manufacturers. You can look at companies like Medtronic is another one of these. But I actually like Boston Scientific because they do a lot of different things that kind of ties in AI with long-term healthcare as well. So this is an interesting play as well. I think there's again different ways you can play it. I'm going to throw another honorable mention out there. Well, in the same conversation about playing the demographics play, the aging population. The ticker symbol is WELL.
Before you go off of Boston Scientific, my brain went to Boston Dynamics, and that's what I was thinking.
Oh, you're thinking the robot guys. That was a little bit of a tie, wasn't it?
Yeah, well,
that one too.
That's scary. Yeah, that's what my head went to originally. But okay, so Boston Scientific, and what's the next one?
It is the ticker symbol is Whiskey Echo Lima Lima. It's Welltower. This is actually a real estate play. And their real estate portfolio is basically long-term care facilities, retirement facilities. You're seeing more and more housing projects built to cater to the retiring demographic here in the U.S. And this one is basically, it's a real estate investment trust. This one kind of breaks the rules a little bit because this is arguably maybe an ETF. I don't know. Is a REIT an ETF? Not really, but not necessarily. So this is a specialty REIT. Again, their specialty is retirement homes and retirement facilities. And as you can see, it's done really well the last several years, but we haven't reached the peak of baby boomer retirement yet either. There's still a lot of boomers in the middle of working, and in the next 10 years, they're all going to be retiring. Us Gen Xers are going to start looking at retirement pretty soon as well, but we're not nearly as big of a demographic as the baby boomers in front of us. So,
okay, well, I'm going to share my two honorable mentions as well that didn't make the list. They didn't make the short list, and the other one, the first one is Walmart, and this was my thought about long-term retail. This is really over the past 5 years. Look at this over the past couple of years, been crazy. Another company that knows how to deliver value, definitely understands supply chains, recovering from this tariff thing pretty well. Long term, I think Walmart is going to be a decade from now. I think Walmart will still be a major company that we're talking about. I don't think they're gone.
What's crazy is that Walmart has a higher PE than Amazon right now. That's insane to me that Walmart has a higher PE than Amazon.
Amazon's 33 PE. That's a bargain.
Yeah, I actually really like your Amazon pick, by the way. If I had a mega cap I had to put in my portfolio besides Tesla, it would be Amazon.
Well, I know what you're going for. You're going for those ones that are going to, have a 69,000% return over the decade. I'm just happy, like maybe give me 20 or 30% over the next 40%.
So that 10 years from now, we can have another one of these and I can rub it in your face, right?
Yeah, we will. I promise we'll do it. Actually, I was thinking we should get together one of our ETF buddies and form an ETF with the 5 or 10 stocks that we mentioned here.
Hey, let's talk to Phil at Kotop.
Yeah, Phil Bach, our buddy Phil Bach. He's or Dave Nadig, of course.
Or Dave, yeah, Dave's
Mr. ETF himself. Microsoft, another company that is destined to be around forever. I remember reading, I think it was the DeHondo Investor, which is a book that Buffett actually recommends. This is written by Monish Prabhai, I think it is. Very fascinating book, by the way. Excellent. I learned quite a bit of perspective about Indian immigrations and why there's so many Indians who came from Uganda and opened hotels in the United States. Really, you ever notice a lot of Indian families, that a lot of Patels in hotels? There's an interesting reason why behind it. Very hardworking, smart people. Sort of aligns with the Buffett sort of methodology of, picking quality and working hard and not looking for things very flashy, and slow and steady wins the race. And the comment that Prabhai wrote about Microsoft, and this is a decade ago that he wrote it, is that Microsoft is phenomenally good at copying other people. So they're not necessarily the most innovative company, but if you think about all the major products that they have, they weren't the first to market with Windows. They weren't the first to market with um,
The Office suite.
Office or
Yeah.
or whatever. What's their database that Azure? They weren't the
Yeah.
first. So they're major product lines, but they are a phenomenal company that does a good job of repurposing other people's ideas into their own and making them work. So I think you could do worse than, and that's what I'm just trying to think about is would it be Google? Would it be Apple? At this point, I'd have to say no. I mean, there's Apple. It just, what's the new Apple product? And I think they've really, my words, smooched the pooch. Apple is, I think that, switching gears a little bit, what's not on the watch list here? And that, Apple, which is my overall number one holding in my portfolio, and I need to work it down because it's, they just, they've lost their magic for whatever reason. We can blame it on Tim Cook or whoever, but I mean, think of Johnny Ives leaving and some of the other, of course, Steve Jobs, of course, but the innovation, the whatever, the Apple Vision Pro it's cool, but when's the last time you ever saw anyone wearing one in public? That's not going to be it. And they smooched the pooch with AI. They totally botched it with AI. And I mean, what's the next thing? A foldable iPhone, maybe? I don't know. I don't know what the
I
next
think another
product is.
thing that I would say is missing beyond Apple is the entire oil and gas space. I think you're seeing that sector shrink as we as a people move to more and more renewable sources of energy, and the technology gets cheaper and cheaper and better to use. And I know there's going to be a lot of people in Texas who are watching me and yelling at me right now. That it's still,
They're used to it because it's come and go. I mean, it comes
and I'm not saying it still can't, that they're still not going to be around in 10 years and that people aren't still going to be driving. I'll probably still be driving my diesel truck in 10 years from now. But the growth, the change in the industry is what I'm looking at 10 years forward and saying that people are moving away from fossil fuels as a primary source of energy, and they're trying to find things like nuclear and solar and getting better and better at converting energy so that there's not as big of a demand on big oil. And so that's another entire sector that I would say for the next 10 years might be something that I'm not going to have in my portfolio.
I would have to say that I agree with you. Although the words, thinking of one of the last resonating comments from Charlie Munger, they were talking about oil and gas at the last 2 years ago when he was there. And he said, I can't imagine a more useful and yet vilified industry. And he said, in history, I can't remember a more useful and more vilified history. And Buffett also made another comment about people were asking, like, should we be drilling here in the United States? And why are we so heavily reliant on Saudi Arabia? And he's in Venezuela and other places that maybe don't like us so much. Why? And he's like, if they're willing to give it to us and we can save ours, why wouldn't we take it? Which I thought was a really good point. But I do, we're seeing, certainly the use of fossil fuels are specifically hydrocarbons to drive cars, working their way down. And we still use coal and natural gas, but I think oil for vehicles and diesel. The trend is probably it's not gonna go to zero, and maybe there's an opportunity in there. You find a company that's well written. There are some. I think of who's the stock symbol FANG, right? So Viper, is it Viper? So, who's the stock symbol?
Yeah.
Gee,
Diamondback.
Diamondback Energy. Yeah, they have. There's another spinoff as well. These are companies that do really really well, but low cost producers. I think there are some interesting, but you're right. They're not on my that's not on my list either. Anything else that you wanted to talk about in this topic? We covered a lot of stuff. We went a little longer than I thought we'd go, but it was certainly
Yeah, no,
interesting
I
discussion.
think that was a fun session. Obviously it's trying to look forward a long time, and I think this is something that as you're looking at your portfolio and trying to build up those long-term holdings that you have, that you can do option trades around and collar trades when the market's chaotic and explosive trades when the market's giving you upside potential. These are the types of names that I like to have on my list and take advantage of. So hopefully we give you some things to think about today.
You talked about collar trades and covered calls a portion of the collar trade, and there's different stuff you read out there, and I'm not going to mention the name, but there are people who are very well known and smart. One famous sort of commentator has made a comment that I've put kids through college trading options. Unfortunately, they're my broker's kids. And that's a funny joke, I guess. The implication is that, he didn't make money trading options. And Goldman Sachs published a study, which I'd be happy to share with people if you're interested, is showing that covered call writing over 27 years outperformed the S&P 500, that it helps to dampen your risk and get better returns. And this is not something that to people like you and me are surprised at. And we've got fans and clients that are doing it with significant amounts of money. And for somebody to throw out, Jason Zweig, say that, retail traders can't make money trading options, I can't do it. So and Jason's a very smart person, but I bet if Jason spent some time with us, and I don't mean a day or an hour, I mean a few weeks, studying, he would come away with a different perception, like our clients who understand this. So, the Goldman Sachs study clearly shows the performance here. Now, you can always criticize reports, but I know my portfolio is doing better. So
Yep.
I'm happy to share it with people. So I'm okay not in the space that I'm in, just keeping it our own thing. I'm sure you saw his email. One of our friends from a long time ago reached out. He's doing iron condors on the 0-day options. It's not my style of business. I mean, if that's what you want to try and do, that's fine. I'm okay making 20% annualized return with moderate risk over year. I think that's good enough for me.
Yeah.
If you have other goals that you want to try and grow your portfolio 1% a day, the best of the best traders don't do that. The best hedge fund managers in the world, if they can do 8% a year, they're phenomenal. If you can get to 10%, you're world class. So it's a matter of perspective and what people are trying to accomplish. I think I was talking to somebody about strategy here today, and that is, don't try to be everything to everybody. I mean, you can't be the lowest cost provider. You can't be and provide the best product, the same thing. If you're going to be the cheapest, you got to be the cheapest. Then your price has to be the lowest. That's your market. If you want to differentiate yourself, you are saying that not every customer is going to be your customer. That this is the niche that we want to focus. And our customers, we've done database. The average portfolio size, and we verified this several times, $1.1 million. So this is not insignificant. This isn't you've got these people doing, I don't know, selling naked puts, been doing it for a year or two. And, here's how I made money on, short-term calls on Tesla or 0-day options. And maybe those work, but that's not our market.
I'll stick with the old boring way. Thanks.
Yeah. The low boring way with, controlling your risk and making a moderate return. I don't know. I don't know if this resonates to people, but we'd love to talk to you if you're interested. Check us out. Come to OptionsANIMal. Go to OptionsANIMal, attend a free class, and talk. I know that David, who was really impressed by the summit. You saw what David Kotar.
Yeah, David sent us a very nice email. Wrote up a very nice report about our conference that we did in Tampa.
He came away truly impressed by what it is that we do, and just because a smart person doesn't, and he's the kind of guy that knows he's not the smartest person in the room, but he probably is the smartest
But
person.
probably is the smartest person in the room.
But he's very humble and realizes that he can learn. He can still learn from other people. So
very good at implementing the old Socrates, the old Socrates saying of all I know is that I know nothing.
if you in my class today, somebody threw that out to me.
No, I was not.
I said, who said that? Was that Sergeant Schultz from Hogan's Hero? No, I'm not even joking. Ari threw it out. He sent the meme through in the chat today. That's a riot that he put it up.
That's funny.
Yeah. Because, well, the topic was about, what do I know and what don't I know? And then there's the other one that's Mark Twain's quote, which is, it's not what you don't know that's going to get you in trouble. It's what you know for certain that isn't certain that's going to get you in trouble.
Certain. Yeah.
And you think, I know this, and you make an assumption, and then it turns out to be something wrong, and going to get you in trouble. Well, this was fun as usual. Glad that we're getting back to doing these. Really appreciate your feedback. Comment, share, like, if you will. That really does help us. If you write a comment, believe it or not, it makes us go up in the search. So just love it, hate it, want to trade it. Why didn't you talk about this? Give us other topics.
Yeah.
Yeah. Thanks, everybody. And that's it. Are we going to end it here?
Thanks, Eric.
All right, brother. We'll talk to you later.